Welcome to Corporate Finance Explained, where we break down the essential topics every corporate finance professional needs to know. This series is narrated by AI, created using CFI's expert training materials, and designed to help you stay ahead in the world of finance. Enjoy this week's deep dive.
All right, so let's dive into this world of corporate tax strategies, huh? Just pretty fascinating stuff. Like, did you know that back in 2020, Tesla made over $1.5 billion? And get this, not from selling cars, but from selling regulatory credits.
Yeah, it really highlights how these companies are, using tax strategies to boost their bottom line, all while staying within the bounds of the law, of course.
Right, totally legal, but still pretty savvy.
Oh, absolutely. It's a crucial aspect of any business strategy. It's not just about minimizing how much you pay in taxes.
It's more than that.
Yeah, it's about maximizing the income you have after taxes, boosting profits, and, ultimately fueling growth. This can impact everything from how much a company invests in research and development to, whether they decide to expand globally.
I see, so it has a ripple effect.
Exactly.
So speaking of research and development, Amazon spent like a mind-boggling $56 billion on it in 2021. What's the strategy behind such massive investments?
Well, a big part of it is tied to the U.S. federal R&D tax credit.
Okay, so they get a tax break for investing in R&D.
Right. It allows them to offset a significant portion of those R&D expenses, which directly reduces their taxable income.
That's a pretty smart move.
It is. It allows them to reinvest more heavily in developing new technologies, potentially giving them a huge advantage over their competitors.
So it's not just saving money. It's about using those savings to potentially leapfrog the competition. This all sounds very U.S.-centric, though. Do other companies outside the U.S. play this game as well?
Oh, absolutely. Multinational companies like Apple, for example, have become masters of international tax optimization. They strategically allocate their income across different countries, taking advantage of varying tax rates to minimize their global tax burden, all legally, of course.
I can imagine this involves some, pretty intricate maneuvering. Can you give us a glimpse into how that works?
Well, for years, Apple used Ireland's low corporate tax rate to reduce their global tax liability. It's a bit like a complex chess game, but instead of moving pieces on a board, they're strategically moving finances around the globe.
That's a good analogy. But this global tax game is constantly changing, right? With things like the OECD's global minimum tax proposal, it seems like the rules are being rewritten as we speak. How does this impact companies like Apple?
That's true. The landscape is shifting, and finance teams need to be agile and adapt to these changes. This is where, the expertise of FP&A, Treasury, and strategy teams really comes in. They're the ones modeling various tax scenarios, advising on capital allocation, and ensuring compliance with the constantly evolving regulations.
It sounds like they're the unsung heroes, working behind the scenes to keep these companies ahead of the curve. So they're not just crunching numbers, they're strategizing, predicting, and navigating this really intricate world of finance and policy.
Precisely. It's a high-stakes game that requires a deep understanding of both the financial and legal landscapes. And, it's not just tech giants that are in on this. Walmart, for instance, strategically places its distribution centers to optimize property taxes.
Interesting. And how about a company like Google? What kind of strategies are they using?
Google leverages something called transfer pricing, where they essentially license their intellectual property, like their search algorithms and software, to subsidiaries in, let's say, lower tax jurisdictions.
So they're using this web of subsidiaries and licensing agreements to strategically manage where their profits are taxed.
Yeah.
It sounds like a very intricate, a very calculated approach to global finance.
It is, and it's a practice that has attracted its fair share of scrutiny. Regulators are continuously evolving their policies to address these tactics.
It sounds like a constant dance between corporations pushing the boundaries and regulators trying to keep up. Speaking of pushing boundaries, let's bring Tesla back into the conversation. You mentioned they're generating significant revenue by selling regulatory credits. Can you break down how that works?
Sure. So Tesla benefits from government incentives, the ones designed to promote electric vehicles and renewable energy.
Right.
But what sets them apart is that they're selling these credits to other automakers who need to meet emission standards but are, let's say, lagging behind in their own green initiatives.
So instead of just using these credits to reduce their own tax burden, they've created a whole new revenue stream by selling them to others. It seems like they've managed to turn compliance with environmental regulations into a profitable venture.
Exactly. In 2020 alone, they made over $1.5 billion from these sales, which significantly boosted their profitability. It really showcases their forward-thinking approach, aligning sustainability with their tax strategy.
Sounds like they're not just changing the automotive industry, but they're rewriting the playbook on how companies can incorporate sustainability into their core strategy.
Yeah, I think that's a great way to put it.
So we've seen how these companies are using these complex tax strategies. But, what does it all mean for the average person? Why should we even care about what's happening in the world of corporate taxes?
Well, it's about perspective, I think. Understanding the financial landscape a bit better, whether you're thinking about investing, looking for a new job, or just trying to understand the news a little more, this knowledge can be really valuable.
So it's like having a deeper understanding of the forces driving the business world.
Exactly, yeah. Let's say you're, comparing two companies in the same industry, right?
Okay.
One's actively investing in R&D, taking full advantage of all the tax credits available, while the other's a bit more cautious. Which one would you bet on for, long-term growth?
I mean, it seems like the company using those tax incentives to fuel their innovation would have a pretty big advantage. It's like they're getting the boost right out of the gate.
Exactly. And understanding how companies approach international tax planning can also, shed light on their global ambitions. You see how they utilize green energy incentives. It might reveal their commitment to sustainability, which could impact their future profitability.
It's like piecing together a puzzle.
Uh-huh.
Once you understand these strategies, you start to see the bigger picture, the motivations, the long-term goals.
Yeah, it's not just about the numbers. It's about understanding the thought process behind the decisions that companies make.
So it's relevant for, anyone who wants to be more informed about how businesses operate, how they compete in today's world.
Absolutely. It's about, connecting the dots between finance, policy, and the decisions that shape our economy. It's about having the knowledge to ask the right questions and see, beyond the surface.
It sounds like a valuable skill set to develop, regardless of your profession or background. But how about we make this a bit more concrete? How can understanding these, corporate tax strategies actually benefit someone in their everyday life?
Sure. Let's say you're considering investing in a company. Understanding their tax strategies can, provide you with some valuable insights. Are they leveraging R&D credits to drive innovation? Are they structuring their global operations to minimize their tax burden?
So it's like looking under the hood to see how efficiently a company's managing its finances. That kind of information could be really helpful when making investment decisions.
Exactly. And it's not just about investments either. Imagine you're, evaluating a job offer. Understanding the tax implications of different industries and companies can be like a total game changer.
So if you're choosing between a job at a traditional manufacturing company and a high-growth tech startup, knowing how they approach taxes could actually influence your decision.
For sure. A tech startup might be using R&D credits and stock options to attract, top talent. A manufacturing company might be more focused on optimizing property taxes and depreciation schedules to enhance their cash flow.
So it's like having these additional data points to consider when comparing job offers,
Yeah.
It can help you make a more informed decision about your career path.
Right. And this knowledge can also give you a new perspective on, current events. When you hear about companies being accused of tax avoidance or governments changing tax policies, you'll have a deeper understanding of the issues at play.
It's like having a decoder ring for the financial news,
Yeah.
right?
Yeah, exactly. You'll be able to connect the dots between business decisions, government policies, and, the broader economic landscape.
It suddenly all starts to make a lot more sense. Okay, so we've talked about how companies are already, using all these tax strategies to their advantage and why, understanding these moves is important, not just for, the finance people out there, but really for everyone. But this world of corporate taxes, it's, constantly changing, right? So what's next? What does the future hold?
Well, it really is an exciting time. I think we're entering uncharted territory here. Global economies are shifting, technology is advancing at this crazy pace, and regulations are, they're trying to keep up.
They're always playing catch up, right?
It seems that way. But yeah, it creates this really dynamic environment where companies have to adapt and innovate just to stay ahead of the curve.
It sounds like the rule book is constantly being rewritten in real time.
It kind of is.
So what are some of the, the biggest trends shaping the future of these corporate tax strategies?
One of the most significant, I think, is the rise of digitalization. Businesses are operating globally now, transactions are happening online, and physical presence is becoming less and less relevant.
Yeah, for sure.
And This presents a huge challenge for these traditional tax frameworks.
So like the old ways of taxing companies based on where they are physically, that's not really cutting it anymore.
Right, exactly. Governments around the world are, trying to figure out how to tax companies that operate in this digital space. We're seeing like these digital service taxes popping up, and there's a lot of talk about a global minimum tax to ensure that, these big multinational corporations are paying their fair share, regardless of where their profits are, let's say, officially booked.
So it's like a global game of catch-up, huh? As these policymakers try to adapt to this like rapidly changing landscape. What does all of this mean for companies, though?
Well, for companies, it means agility and foresight are like super crucial. Finance teams need to be really proactive. They need to be monitoring these regulatory developments, anticipating how potential changes might impact their tax strategies. They have to constantly adapt so they can avoid any, costly surprises down the line.
It's not just about crunching the numbers anymore, right? It's more about anticipating the future and understanding these like global forces that are shaping the business landscape. Besides digitalization, though, are there any other trends, on the horizon?
Oh, for sure. Sustainability is like a major force driving change as well.
Hmm.
Governments are implementing these tax incentives to encourage companies to, adopt sustainable practices. So we're seeing a shift from, let's say, penalizing polluters to rewarding companies for embracing greener initiatives.
Okay, so now companies are being incentivized to actually align their business goals with this like larger societal shift towards sustainability.
Exactly. It creates both challenges and, a lot of opportunities. The companies need to adapt their operations to meet these like evolving standards, but they can also leverage these incentives to actually gain a competitive edge.
It's about turning sustainability into a core part of their strategy, not just some, side project that they do. Are there any companies doing this particularly well?
Well, companies like Tesla, they were really early adopters of these sustainable technologies. They're kind of reaping the benefits now of those early incentives. I think as the world prioritizes sustainability, we can expect to see, even more innovative tax strategies emerge in this area.
It's inspiring to see, companies taking that proactive approach, turning sustainability into a win-win, for both their business and the planet. As we wrap up our deep dive into this world of corporate tax strategies, what's the one key takeaway that you really want our listeners to remember?
I think it's important to remember that these corporate tax strategies, they're about so much more than just, minimizing payments. They're really an integral part of a company's overall financial health, their strategic direction. They actually reflect a company's values, ambitions, their vision for the future.
Yeah, it's about understanding the story behind the numbers,
Yeah.
the strategy behind that balance sheet. What, like, final thought would you leave our listeners with as they, continue to explore this really fascinating world?
How about this? As global tax policies are evolving, what role can like individuals, companies, and governments play in actually shaping a fairer, more sustainable, more equitable system for everyone?
Wow, that's a really, thought-provoking question and one that, deserves a lot more exploration. Well, thank you so much for joining us on this deep dive into the world of corporate tax strategies. We hope you gained some valuable insights, maybe a new perspective on the forces that are, shaping the global business landscape. Until next time, keep exploring, keep learning, and keep asking those insightful questions.
Thanks for listening to Corporate Finance Explained. If you found this episode valuable, be sure to check out more episodes and explore CFI's highly rated courses at corporatefinanceinstitute.com. Don't forget to subscribe for more deep dives into essential finance topics. See you next time.